Welcome to our video on understanding the stock market as a beginner. The stock market can be a confusing and intimidating place for those just starting out, but it's a vital component of the global economy. In this video, we will be discussing the basics of the stock market and how it works. Body. The stock market is a place where companies can raise money by issuing shares of stock, which represent a piece of ownership in the company. When a company issues stock, it is essentially selling a small portion of the company to the public in exchange for money. This money can be used to invest in new projects, pay off debt, or distribute to shareholders in the form of dividends. When someone buys a stock, they are essentially buying a small piece of ownership in the company. The value of the stock is determined by the supply and demand of the stock in the market. If more people are buying a stock than selling, the price will go up. Conversely, if more people are selling a stock than buying, the price will go down. The stock market is made up of exchanges, such as the New York Stock Exchange, NYSE, and the NASDAQ. These exchanges are where stocks are bought and sold. Companies can list their stocks on an exchange, and once they do, the stock can be bought and sold by anyone who is interested. One important concept to understand when it comes to the stock market is the concept of risk and return. All investments come with some level of risk, and the stock market is no exception. The potential for high returns comes with the potential for high risk. It's important for investors to understand their own risk tolerance and to diversify their investments to spread out the risk. Another important concept to understand is diversification. Diversification means spreading out your investments across different assets and industries. This helps to mitigate risk because if one investment performs poorly, the others may still perform well. There are different ways to invest in the stock market. One way is to buy individual stocks, but this can be risky because you're putting all your eggs in one basket. Another way is to invest in mutual funds or exchange-traded funds, ETFs, which are a basket of stocks managed by a professional. These options provide diversification and can be less risky than investing in individual stocks. Another popular way to invest in the stock market is through the use of robo-advisors. Robo-advisors are digital platforms that use artificial intelligence and machine learning to provide investment advice and manage portfolios. They are a good option for beginners because they are easy to use and come with low fees. It's important to remember that the stock market is always changing, and that past performance is not necessarily indicative of future performance. It's important to do your own research and to consult with a financial advisor before making any investment decisions. Conclusion. In conclusion, understanding the stock market as a beginner can be a daunting task, but it's important to have a basic understanding of how it works. The stock market is a place where companies can raise money by issuing shares of stock, and where individuals can buy and sell shares of stock. It's important to understand the concepts of risk and return and diversification, and to consult with a financial advisor before making any investment decisions. Call to action. If you enjoyed this video, please hit the like button and subscribe to our channel for more videos on investing and personal finance. If you have any questions or comments, please leave them in the comments section below. Thanks for watching.